What is your business really worth? That's the most common question we get from business owners, and it's also one of the most important. While there are a few ways to value a business, we're going to talk about the method that gives you the most accurate picture: the earnings multiple. You might have heard about a revenue multiple, valuing a business based on its total sales. While this seems simple, it can be misleading. A revenue multiple doesn't tell a potential buyer anything about your business's profitability, expenses, or how well it's managed. Two businesses with the exact same revenue could have wildly different expenses and profits, making a revenue-based valuation unreliable. This is why we focus on an earnings multiple. This method is based on what the business truly earns for its owner. We're talking about seller's discretionary earnings, SDE. This isn't the taxable profit on your income statement. It's a more accurate, normalized view of the business's actual financial performance. To find your SDE, we adjust your year-end income statement by adding back expenses that don't reflect the true profitability of the business. This gives a buyer a clear, normalized view of the company's financial health. Here are the key add-backs we look for.
Add-backs.
We add back items like interest payments, depreciation, amortization, and taxes. Owner-specific benefits. This is your salary, health insurance, company car, or any other personal expenses you run through the business. Since a new owner will have their own compensation structure, we add these back to get a truer picture of the business's earnings. Discretionary or one-time expenses. These are costs that a new owner might not incur, like a one-time charitable donation, a new computer system, or a vehicle purchase. Once we've made these adjustments, the resulting number is your seller's discretionary earnings. This is the core figure used in almost all small business valuations.
Once you have your SDE, we can determine your earnings multiple. For most small businesses, this number falls between 1 and 4. The multiple you receive depends on how attractive your business is to a buyer.
A low multiple, closer to 1, is given to a business with higher risk or limited growth potential.
A high multiple, closer to 4, is for a business that is low risk, stable, and has strong growth potential.
To figure out your specific multiple, we look at several factors that buyers care about, such as your customer base and customer retention, the strength of your management team, your market position and growth trends, the quality and accuracy of your financial records, the type of business, and the barrier to entry of the business, or how difficult is it to start up the business. At First Choice Business Brokers, we can help you assess these factors to get an early sense of what multiple your business could command. Determining your business's value is the first and most critical step in preparing to sell. To get a comprehensive and professional valuation, we recommend a confidential consultation. Contact us today to learn what your business is truly worth.